Job market remains booming. Openings increased 700,000 to 9.6 million. Job openings totaled 9.61 million for the month, a jump of nearly 700,000 from July and well above the Dow Jones estimate for 8.8 million. Much of the increase in openings came in professional and business services, which showed a burst of 509,000. Quits remained around flat as previous month, in line with normal pre-COVID levels. Layoffs also remained relatively unchanged, notably below pre-COVID. Employment vacancies at U.S. businesses unexpectedly surged in August, a sign that the labor market remains tight and robust despite the Federal Reserve's efforts to slow the economy. Job openings totaled 9.61 million for the month, a jump of nearly 700,000 from July and well above the Dow Jones estimate for 8.8 million. The Labor Department said Tuesday in its monthly job openings and labor turnover survey. Hires, however, rose only modestly, moving up to 5.857 million, an increase of just 35,000. Much of the increase in openings came in professional and business services, which showed a burst of 509,000. Stocks fell following the report as a tighter labor market could put more pressure on the Fed to keep interest rates elevated. The Dow Jones Industrial Average most recently was off more than 260 points on the session. The Fed follows the JOLTS report closely for signs of labor slack. Openings had been on the decline for the last several months, indicating that the central bank's interest rates hikes were beginning to have an impact on a labor market that had been hit by a large supply-demand mismatch in which openings had outnumbered available workers 2-to-1. The ratio now is down to 1.5-to-1. Following an increase of workers classified as unemployed in August. The August JOLTS report comes just a few days ahead of the department's non-farm payrolls count for September. Economists surveyed by Dow Jones expect that report, due Friday, to show an increase of 170,000. Quits, a measure of worker confidence in finding a new job after leaving a previous position, were little changed. That also was the case with total separations and layoffs. There is a huge disconnect happening here. Companies have totally lost the plot and are unwilling to take any risks in hiring, leaving tons of people on the sidelines. Alternatively, who's to say these job openings are real? The article itself claims only 35,000 people were hired in August. Tons of evidence companies are posting jobs they have no intention of hiring for a myriad of reasons. If we are going to rely on these numbers for our monetary policy, the Fed needs to pull its head out of its ass and get more granular with the data. People's livelihoods are at stake. How many of these pay enough to rent a one-room apartment and cover a car plus living expenses and utilities? It's the goddamn holiday season. How is everyone surprised that there's further demand for jobs when every company is scraping to sell as much as humanly possible? This is the time of year where most people lose their minds shopping, where harvests are due. Travel happens to go visit family people don't like. And some people get away just so they don't have a lonely holiday in their city. Of course every company is hiring right now. That's how it goes this time of year. Consider this: we demand more salary so that it would catch up the our salary that would be if it kept the growth with economy since Reagan, before we jacked the rate to 30 overnight, to end the inflation. Legitimate question: if my company sends out a job posting for one engineer position across 5 different employment websites, would this be considered 5 new jobs on the market or just one new job? Imagine all the other companies doing the same thing for one new position. Only a 30 JOLTS response rate. Hard to trust this data, and Goldman had a note on just this point. According to Goldman's data, private sector shows 1 million less jobs than the government's data. Where are these jobs? Because every application I put in is either not responded to, or says the volume of applicants is too high. Yay, sorry, we are still in the techpocalypse at least until next year. Each job is showing going from 20 applications to 1-3K, so yay. I ain't buying it. Lots of shit jobs, contracts, and others looking for 20-year seniority and skills for legit half the market median are cropping up through the hours people are working matters. Some companies are just cutting hours instead of laying people off. If someone gets a part-time job that is only a few hours a week of work, it's still a job, but it's not a good job. In some cases, companies might even prefer to have multiple part-time workers instead of full-time workers because it makes scheduling easier and they don't have to pay full-time benefits. More propaganda being pushed. This doesn't match reality. Too much liquidity in the system still, even with record high interest rates. Job market still hot. 1.6 jobs per person. U.S. national debt $33 trillion. Till liquidity falls and job market cools, inflation will not come down. As long as growth continues above 2.1 GDP. The Fed doesn't need to cut rates. There won't be a rate cuts regardless where inflation is, and the market won't correct. At least there's an explanation for the market tanking and taking my portfolio with it. Still sucks. But somehow not as. WTF, just sucks NVM. And yet consumption without the use of credit is down and has stayed down. The largest growth sector in 15 states has been social services. Makes sense, the recession might be worse than expected. Why do people keep reporting headline numbers and ignoring 3 years of downward revisions? What is meant by professional business services? I think we have a ton of shitty jobs out there that nobody wants and pay is horrible. I think it's just because most regular jobs are pointless dogshit with wages that no one could afford to live on. How is this a good thing? Also, most job postings are just fake, left up by employers after positions are filled. Fake news. I've seen jobs on LinkedIn with thousands of applicants get reposted week after week. So stupid. Employers know they're in charge and can be as selective as they choose. I can't wait for the tables to turn. Companies truly suck. Inflation will keep happening unless we get to 5 unemployment rate. 5 is important because it will cause a decrease in consumer spending, which will lower prices. I am not for people losing jobs, but this is basic economics. Good news that is once again being painted as secretly bad by Reddit. I'd like to see, of the openings, how many of those positions are actually being filled. The actual experience of people looking for jobs does not match these numbers. Bond whores getting fucked hard enough to cause SVB 2.0. Good news for labor. Not so much for inflation. Aside from the 25 bits per second they have on schedule before the year, they might announce an extra 25 bits per second or 50 bits per second if the job market stays hot like this. And with the holiday season right around the corner, we could easily get a 50 bump instead of just 25. The first set of numbers mean nothing. They will be revised down later. Oh look, 50 million job openings. 1 month later. Actually, it was 5,000 job openings. Someone added some extra zeros by mistake. Will be revised down to 350K with no press coverage. Fake numbers presented by fake job postings.